TCS is what we want to focus on. So third quarter numbers largely in line with expectations. Rima and I caught up with TCS's MD and CEO, K Krithivasan, and ED President and Chief Operating Officer, Aarthi Subramanian, began by asking them about the quarter gone by and the recent very large acquisition of Coastal Cloud, $700 billion, one of the largest ever by TCS. Take a listen.
Our ambition is to be the world's largest AI-led services company. And we laid out 5 pillars through which we are going to achieve. And one of the pillars about that is how do we play in the larger ecosystem. And we said we are going to be more acquisitive going forward. Yes. And we believe this is the best way to achieve scale at speed. Okay, you can always build competency inside, but building competency at scale and speed, acquisition becomes very helpful. And this particular acquisition, Coastal, is very highly regarded, both in the advisory space and in the professional services area. And with the List Engage, what we acquired in the previous quarter, and Coastal, it keeps us near the top 5 of Salesforce consulting. Mm-hmm. So there are so many things going for us, and it also comes at it is a highly profitable company. So we believe that the price we have paid is quite reasonable, and our shareholders will be rewarded in the long run.
In that space, is everything a little pricey right now, given the state of things with AI, etc.? I mean, I think it's cheap. I'm assuming, right?
This is as I said, like TCS is very cautious. Yes. With acquisition.
Yes, that's why I'm asking. 5 times sales. So previous acquisitions have been between.
We looked at what they are doing, their clients, kind of services they do, and their financials. Okay. All of them put together, it made a lot of sense for us.
More deals on the in the works, Aarthi, if you want to come in. I mean, you guys hinted that you will be acquisitive, so it's not going to stop at, I'm assuming, 1 or 2.
So we are evaluating opportunities, and like we said earlier, I think there is a very comprehensive framework that we are looking at, and we've talked about the new age services that we are focused on. There's AI data, cyber, enterprise solutions, which I know Salesforce is part of, and digital engineering. So across those 5 or 6 services which are new age and important for the future of the company, we are looking at each of those areas, and looking at opportunities and see how best they fit into the strategy and what we want to achieve.
As we've started 2026, there's so much geopolitical noise and uncertainty. Now, this is the time when companies typically set their tech budgets for the full year. Are we seeing any cautionary pauses? How is discretionary spending and the environment today versus, say, 3 months, 6 months ago?
Rima, same question we answered last year also. The way tech budgets are finalized for the year has gone through a dramatic shift. Most of our customers are taking a quarterly call based on the opportunities that are in front of them, and it's more the ROI-based approach. And gone are the days where the budget for the whole year is fixed. So, our second point is this macroeconomic uncertainty. I think people are also getting used to it. They are now coming to realize that this is going to continue, and they need to play within this, and they cannot be pausing the budget permanently. So the approach is, as I said, more ROI-based approach. Look at a program or a project. When is it going to yield the result? Is the ROI quick, or is it going to take 5 years?
So there's no change in the last 3-6 months?
No.
Will FY26 international revenue be better than FY25, as you had guided earlier?
We are trying. We are trying all our... we definitely have a high ask rate on Q4 to achieve that.
What's the ask rate, if I may ask?
It will be upwards of about 3 to 3.5%, I think. Okay, so it's a high ask rate. We are doing our best to see how bad. As I said, there is a improvement in Q2. That same improvement in demand environment continued in Q3, but Q3 happened to be a furlough quarter. So we are doing everything possible to ensure that we stay above FY25, but we'll make all the attempts.
Okay. Aarthi, AI-led revenues. I mean, the street was very excited when in the analyst meet you quantified the AI revenues for the first time. At that time, it was $1.5 billion in annualized revenues. Now it stands at $1.8 billion. Can this run rate sustain this 15-20% quarter-on-quarter growth? And where can it lead to? Today, AI-led revenues is still single digits, a little more than mid-single digits to your overall. I mean, give us some sort of an immediate goal, say 1 year down the line, what could that number look like? And what does it tell you about the rest of the business? Because that seems to be degrowing then, if this is the primary driver.
See, when you look at the spend on AI across industries, right? Every industry, customers are really looking at how they can deliver value with AI. And so if I, look at the last 3 quarters, every quarter, right, our incremental revenues on AI is just getting better, right? And when we met on the analyst day, December 17, the number we reported was 1.5 billion annualized, and now we are at 1.8. So I think the traction on AI is at a smaller base, but it's growing extremely well. And I see that continuing, because I think the more you see the value from the AI initiatives, customers are now expanding and scaling those initiatives across the portfolio. So I wouldn't want to put a number on it right now, but you'll see quarter on quarter. Now that we are reporting the numbers, you'll see the annualized revenues definitely gaining momentum.
What about pricing on some of these deals, Krithi? I mean, we've talked about this earlier as well.
Overall, new age services, the pricing is much better. And we are not seeing any pricing deflation in this quarter.
Nothing. So they're not, I mean, even compared to say 3 or 5 years ago, I mean, is there, when you enter talks for deals, pricing, etc., there's no
pricing, particularly for services like AI. Pricing is not a consideration. The customers are looking at how soon they can realize the value.
And this new age services, which is not just AI, but it includes cloud native programs, cybersecurity, that number was $11 billion in December in the analyst meet. What does it stand at now?
I think it has grown. Like we are not going to be publishing that number because we never published the service line numbers before. We made an exception because we made a commitment that we'll be world's largest AI-led service company. So we thought we'll start publishing the AI service, AI revenue. But it's growing. It's growing, but as you are asking, like the challenge is to ensure that if there is a slowdown in traditional services, how do we ensure? In fact, even traditional services need AI nowadays. How do you use AI to spur the growth in traditional services is what we are looking at, and how do you ensure that one doesn't cannibalize the other.
The BSNL phase 2 order was expected in Q4. I mean, what is the timeline?
See, we have got the, as we told before, we got the advance PO.
You've got the PO, yeah.
We don't have the actual PO to proceed with the work. We are also waiting for the government to issue the PO. And
what would be the contribution of the acquisitions in Q4? ListEngage, and that's a smaller one, but Coastal Cloud and Together?
Together, I'm just give me a minute. Like together, both. See, ListEngage will be less than 10 bips.
Correct.
Okay. This would be in the range of between 40 and 50 bips on a quarterly basis.
So 50 to 60 bips in terms of inorganic contribution.
Yeah, but this is already like ListEngage is already taken on a quarterly basis. So what you should expect is about 40 to 50 bips in.
Will we see something large, transformational in 2026 in terms of M&A, Krithi? Or is it going to be more tuck-in, smaller acquisitions to fill those white spaces that you referred to?
We are not ruling anything out. Okay, we are looking at a broad spectrum of, but it's essentially it has to fit into a larger play. Okay, we are not going to be acquiring for the sake of just the revenue or top line. Okay, we'll be acquiring where we see there's a greater synergy, and where we are able to deliver greater value to our customers. There could be something larger if it's applicable.
By the end of 2026, you would have made in 2026 how many acquisitions? I mean,
no, I don't know. I don't want to
more
take
than 3, less than 6.
I don't want to take a target on acquisitions. Acquisitions is, as we see, like it will be more opportunistic. We see what is the value and do it as long as they fit into our larger playbook.
Would you be open to taking small minority positions in some of these areas in companies
The adjacencies, which is
We have looked at it, taking minority positions. Again, it has to make it, again, we are not against it. We do look at certain options, but we also see, does it produce value for us? By taking the minority stake, what is the value we get? And what is the value we are able to give it to our other shareholders? If it's strengthen the partnership that we can, or if we can take them to a larger set of our customers and able to scale that partnership. So if that kind of synergy is there, we'll definitely look at that.